Hello and welcome to August 6th. Alpha's KR fell to 100 ROI from 138. Before we go there, let's go ahead and get out the other bad news. Stochastics, who was doing quite well in the early morning hours this Friday, at the late afternoon, something must have spooked the market because we ended up with a minus 6% for the Stochastic, and the SPY is at 18.8, and there's the proof is 18.8. And I said before, if you're going to be trading to beat the SPY, you better have a very good trading plan. There are some very good trading plans out there. I don't know them. That's what my journey is all about, is finding them. There is one person called Fat Cheetah. Fat Cheetah on Instagram? No. Twitter. Fat Cheetah on Twitter has been doing spectacular. And you can go and look at his work, and that's what he's up to. Okay, that said, that's the bad news. 18.8 against the Stochastics. And here's our chart. Here's our 100 ROI on KR. But notice it's very small. It's very small. It's like the three red soldiers. And then it turns around. We have the three red soldiers. And then maybe turn around. I did draw this way earlier. You can go back check my videos from a couple of weeks ago. And so we are still... we're still in profit zone. It's still $400. It's still against a 2140. So if we're able to get out with, well, we're not, because the reason is that our stop is at the third ratio. So we are in it. We're in this trade until October, and we're still only in August. So we still got all of 30 days, September, October, and the 30 days of August. Excuse me. So we're still a good 70 days, 75 days out from the expiration on this. So we're going to just keep to the plan and tweak as you need to. And as you have seen, we have been doing that with the Elvis shifts. So that said, KR 100. Let's go on now to our other leader is PG, and PG is hitting here at 69%, another pullback in this zone. It may encounter some resistance up here at the top of 144. So we want some nice, we want a substantial profit up above the third ratio. So we're still here at the first ratio stop. Now, scalpers, ratio scalpers. Yeah, you could have put the stop here once it cleared this point of the gantry, and then you could have go ahead and wait for price to clear the 140 marker, which would have been right there. And then on the 142, it closed right here at the high, closed at 143.95, and then you could have put a stop here at the third ratio or taken profit, third ratio. But again, we are doing DTE. We're out to see if the 5 gentlemen who I met who trade DTE, does it work for us? They might not have revealed all their caveats. So that's the other thing too. Some people tend to forget little tiny details which would impact the trade. That said, let's go on to our next leader, and that is Mac D, Mickey D's, as my daughter used to call it in high school. And Burbank Mickey D's, I believe it was on San Fernando Road, going toward the airport. And it was quite a hangout, she reminded me. So where are we? We are here at the first ratio. So we are looking at, like I said earlier, we probably get out between 5 to 15%, looking more like 10% if we touch that third rail right there. The idea is that you get back our buying power. You can see our buying power has dropped to $62.86. We have a pending trade on TLA, which I'm going to have to look at to see if that's going to be a cancellation because it did not trigger. All the other trades did get triggered, as you can see here. XLV, V, and RCL. So back to McDonald's. Our stop is here at the first ratio. It is a put, and McDonald's owes $14.31, and we are looking at $65. So again, getting back the buying power is the first criteria. Protect capital, as Sean Takayoshi, invest with fire, says. No money, no gain. All right, moving on. RTX, going on to RTX. Here at RTX is right there. That's Raytheon. And Raytheon has been struggling. It It's cleared its gantry, it's got an EPS, but it does not have the first ratio. And it's been going through this zone. But look, the 10 EMA is ever so inclining. So there must be some kind of possibility of accumulation in the RTX, and that's what's substantiating the profit, or substantiating the price, to stay range bound until enough buyers have come into it and says, hey, wait a minute, somebody's getting a good deal here and we want in on it, and that will start pushing the price back up. Our new arrival, Visa, came in at 0.1 to what disappointment, but at least it's a positive zone. So we're going to go ahead and look at that. And there is there's the stop, which is also known as a dipper low. There's our entry, and a matter of closing above here to get it at 240.42 for the gantry. All the others are in negative territory, and TRL will be a separate video. That said, I need to review YELP. YELP was a very interesting point. In the morning, I do check out the stock to see in the morning to see what's going on and to see any possibilities that I can get ready for a report. And it's extremely interesting. It opened way up here and it immediately retreated. It was like, wow, nice big jump, and then it came right back down. And remember, we were at minus 46% last week down in here in this zone. But the bottom line is that it did receive a green arrow saying the price closed above the 10 EMA. And you also notice down below the indicators are also in the uptrend. So this could be just that people got tired of waiting at $35, who got it at $35 and got tired of waiting, and they want to grab something off the table ASAP, and boom, they do it. Now, one of the rules too, remember that I was also a pension fund pension fund trustee, and many portfolio managers, I asked them, how do you get into a trade? And they said they wait for the 20% drop off of price, and then what do you get out when the 20% makes into a profit? So that's the whole idea. Buy when it has what they call a discount, 20% drop, and then you don't need to make a full 20% of that drop. You need 20% of your entry point. So let's say that we had a lot of buyers here at 35, and let's see if our portfolio managers held true in selling off at 43. So there's our 20%, and the answer is 42.36. What did I tell you? What did I tell you? The price, whoever got in down here at 35.40, 35.30, waiting for the 20% gain in profit, and as soon as they open at 43, they hit their triggers, got their 20% profit, and it's off to the races. Done. That's what portfolio managers do. Their job is to grab, and the average portfolio manager is 20%. Now, some portfolio managers grab more, like they'll wait for 30 or 40%. It all depends upon what they know in the back room and the fundamentals. And then there's some fund managers who will grab it at 15 if they feel confident that it's not going to go much higher, and they rather grab a profit, because the profit in the hand is more than 1,000 in the bush. So that's said there. So that's pretty much plays it out. Bought here, sold there, made the 20%, done. All right, so that is it for us. We're going to go ahead and go to TLRY, and we'll be running. TAL. Let's see what happened to TAL. TAL, we are deployed. So there's no scanners for the alphas. We are going to go and look here and see if we got triggered, and you can tell. Remember what this remember one of the rules about stochastics is that if the order does not trigger, get out. The order did not trigger. Right there. And we are now going to cancel this order. How would we cancel the order? We go here to our bubble, turn on our sales bubble right there, apply OK, and then come here and knock out sales bubble, the buy bubble. Once you knock out the buy bubble, the sell bubble will take itself out. And there we are. And now we are back at $311 in buying power. Yet, unfortunately, it does not meet our 10% criteria of getting into a trade. But that is the conclusion of today's report for KR at 100%. And I will catch you later on the next video with TLRY.